All right. Welcome, everyone, to this month's expert interview. We have two absolutely fantastic investors and realtors here because I think it's time that we take a look behind the scenes and get the real dirt on what's going on with some of the top markets in the country. So thank you so much for joining us here today. We have Tom Pobojewski, who is a fantastic realtor out of the GTA in Ontario. Tom, what's the name of your brokerage?
Orla Pace Signature in Toronto.
Wonderful. And you specialize in the Oakville, Mississauga, sort of the West End type markets, as well as you'll even go as far as kind of St. Catharines, Kitchener-Waterloo, and those areas too, right, Tom?
Absolutely. Yeah, West GTA. I mean, also the East Side right now. We're going to talk a little bit more about this, but we're even going to the East Side. So your Durham region, upwards of Barrie. So fairly far distances, but we cover quite a bit of ground there.
Fantastic. I love that. And one of the reasons why I've asked you to join us today as well, Tom, is that you have a successful flipping company. You are one of the very, very few people I know who were flipping all the way through the period after COVID when the markets were diving and things were getting really tough. There's a ton of flippers that really struggled. And you still thrived. So I think you're going to have some great insights. You really look at things through the lens of not just as a home buyer or a home seller, but really as an investor, and you specialize in the numbers as well.
Yes, absolutely. It's that's one of my niches. So, I mean, we help people buy and sell real estate, the traditional moving someone from A to B. But at the same time, we have this core business that we focus on helping people flip property. So I do it myself, but I've also helped a lot of clients buy, renovate and sell properties for profit during this whole time period that we've experienced.
I love that. And as a recovering accountant, I absolutely love that you are known for finding the best deals and making sure that there's smooth transitions and you do business with a ton of ethics and integrity, which I really like and respect. And of course, we have James as well. James, you and I have known each other for a number of years. You are one of the most passionate realtors and and entrepreneurs that I have met. You are a top producer in Western Canada. You're the leader of the Mogul Realty Group, and you are actually actively doing business in both Vancouver and Edmonton, correct?
Yeah, that's correct. We've got an office in both provinces.
That's amazing. And that must be there's different, the markets are quite different. You know, Vancouver, BC in general is generally perceived to be, at least in the past, a much hotter market for home buyers, whereas Alberta is generally much more investor based, is it not?
I would say that the two markets often exist in opposition to each other. And what I mean by that is if it's really hot in Alberta, usually it's kind of slow in BC and vice versa. So it's really interesting to watch how two places that are really only an hour and a bit flight apart can behave so amazingly differently as real estate markets.
That's super cool because it sounds a lot as well as an entrepreneur and business owner. I would look at that as like risk mitigation. So that when you have properties in one area where things are quiet, you know, they're not appreciating the same way, you might not be generating the same cash flow. By offsetting with properties in another area that is growing by leaps and bounds, that is a hot market, that is in multiple offers, you really get kind of the best of both worlds. And hopefully between the two, as they cycle through the markets, they're actually creating a lot of stability in your portfolio.
I completely agree with that. I think we have a lot of investor clients across Western Canada who create a strategy that balances between both marketplaces. Because yeah, a diversified portfolio is a healthy portfolio, and there's a lot of diversity in the markets in Western Canada.
Yeah, absolutely. And you have actually become one of the go-to resources for investors in Western Canada. You have a huge community for investor networking and education called Mogul Mastermind. I love that you are specifically catering to helping investors find their next deals.
Yeah, we really do focus on the investor clientele. In the 20 years we've been in business, it's been all about investment properties in Western Canada. And we do love getting our investor community together so people can share ideas, get inspired, learn about what's current in the market, and build their network to see the next opportunities. So I think
Fantastic.
that's why we host Mogul Mastermind. And for the last 10 years, it's been one of the bigger meetups in Western Canada for investors to get together.
Love it. And I should introduce myself if you are new to the expert interview series. My name is Elizabeth Kelly. I am a real estate and business coach and entrepreneur. I started my own companies 20 years ago when I started investing in real estate. I've run property management companies and and rent to own companies, and I absolutely love the freedom that comes from being a real estate investor, being an entrepreneur. There is such tremendous reward in terms of being able to chart your own journey and go after your own goals and dreams. And I'm thrilled now to be a coach, as I have been for almost a decade, and I help people chase their dreams and their financial goals. So I love having people like James and Tom here to dive into the nitty-gritty and really get to the bottom of what's going on in the investor and entrepreneur landscape. Today, we're going to be talking a little bit about market conditions, where these two experienced and knowledgeable investors see the opportunities, what risks are present. We'll talk a little bit about landlord-tenant stuff. I don't want to go too far down that rabbit hole, but we'll talk about kind of the biggest challenges we're seeing, and then what investors need to focus on right now. So this piece is going to be a little bit about education and knowledge, but it's also going to be focused on opportunities, because I know there's a ton of negative crap out there and a lot of fear. So we're going to focus on what can we actually do to take charge of our financial futures. So let's dive right in and start by talking a little bit about, let's start with, what do you see going on in your market right now? And well, okay, we'll start with that one. I won't pile too much on you right away. Tom, tell us a little bit about what's going on in Ontario and the GTA.
So, I mean, the Greater Toronto area is usually a good barometer for the rest of Ontario, as for the most part, just given how big the city is, largest city in Canada. One of the largest, if not the largest, real estate boards in all of North America. Right now, what we're seeing is the following. I mean, since about January, I think the most surprising stat is that we've seen is that the demand, meaning the number of buyers that are transacting, is actually down from last year's. So in January of 2025, it was down 9%. In February of 2025, down 27, 28%. And just today, they announced that March sales are down by 23%. Okay. And that's probably the most, I'd say, surprised, just because that we've seen that interest rates have come down 2.25% from last year. So you would think that with the lower interest rates, that would create the demand. It has not, and that is because of the uncertainty with the politics that has taken place with not only the federal election, but with the whole tariff situation. So a lot of buyers are right now just staying on the sidelines and waiting for an opportunity. So we do see a lot of activity, but they're just not pulling the trigger at the moment. Meanwhile, inventory, I mean, the number of properties available for sale is actually up. That has been taking place for a while. However, when you have, again, supply is up, demand is down, what does that usually do to prices? You would think they would be down. It's not the case. They're actually about just slightly negative 1 or 2%. Now, and the reason being is the cost of borrowing has gone down and made it somewhat more affordable for people to still purchase at the same prices as last year. And so really what we've seen is the purchasing power for buyers has actually gone up by 20% because the cost of borrowing has gone down. So that's what I'd say high level, what we are experiencing. And as I would say, some, of course, markets are doing much better than others. You can get kind of delve into the details in terms of which ones are underperforming, which ones are overperforming as well. So we can kind of get into that as well.
I love that. And I think there's two critical things to take away from this. First of all, is we know that money is made when you go against the grain or against the flow, and you do the opposite of what everybody's doing. You know, that famous Warren Buffett quote, you know, when everybody's fearful, be greedy, and vice versa. So if everybody's fearful right now, usually that indicates an opportunity to be able to jump in and potentially get some stuff under market value. Maybe you find a motivated seller, you're able to put a deal together where the numbers look much better because the cost of borrowing is higher. I love that. Thank you, Tom. And what about you, James? What are you seeing in your markets?
Well, the Vancouver market is in a similar situation to the Ontario market. It is definitely, by all statistics, a buyer's market in Vancouver. And so to touch on your previous comment, even though a lot of buyers are fearful because of a slow market, it is a really good window of opportunity in a market that's typically performed extremely well in the Canadian landscape with lots and lots of appreciation. So, my thought process is, if you are a Canadian buyer, even though Vancouver isn't known as a cash flow market, in the spirit of buying low and selling high, there's a lot of opportunity to get a lot of deals in the Vancouver market right now. A little sector that I would pay extra close attention to would be development. There's a lot of developers really stuck on pre-sale projects where they're not getting their initial pre-sale numbers hit to get their sales velocity. And so if you're willing to shop around, you can find some developers that are willing to give very, very good packages on pre-sale. Conversely, Edmonton is really pushed all the way to a seller's market right now. We've had hundreds of thousands of people move to Alberta in the last couple of years for a number of reasons. And those people are now settled looking for houses, and there's an inventory mismatch between supply and demand. There just aren't enough houses on the market for how many people want to buy one right now. And so we're seeing very short days on market, lots of bidding wars, lots of people acting very fast to buy properties, lots of unconditional offers. All of the indicators of a really hot seller's market. That's what's happening in Edmonton right now.
Ooh, that's pretty powerful. So to me, what I'm hearing is it's a great time to be a developer and a builder in Edmonton and in Calgary, in Alberta in general, even.
I would completely agree with that. And the Edmonton City Council has approved several bylaw and zoning changes to make it even easier for smaller developers to build projects. So when you think developer, a lot of people's minds automatically goes to condo buildings, high rises, townhouse sites. But you can be a developer by building, a small 8-plex on a city lot. And the city of Edmonton is very, very happy for those types of projects to be approved. And they're making it very, very easy for people to get their plans approved, get their projects approved. There's a lot of ease of development. As an example, it could take a few months to get an 8-plex approved in an inner city lot in Edmonton, whereas something like that in Vancouver could take a few years to get approved. So it's a very developer-friendly environment right now, because there's just such a demand for places for people to live.
Yeah, absolutely. So is that, if someone asked you, well, I'm going to ask you, is that the number one investment model that you would suggest right now would be to look at getting into development in Alberta? Is that kind of where you're seeing the numbers work the best right now?
I mean, I hate to say an investment strategy for that is one size fits all, because that we all know that's not how investing works. So, but I will say it is quite popular because it is such an easy project to get into. The cost of lot plus build is about $2.5 million, which is quite accessible to a lot of medium-sized Canadian investors. And a building like that in most markets in BC and Ontario would cost 2 to 3 times as much. So so the cost per unit for brand new quality inventory in a good part of town, great pricing compared to the Canadian landscape, which is why a lot of people from across Canada are investing in creating this housing. And with the housing demand, with interest rates being so low, it's a great time to bring this type of product online.
Love that. That's awesome. Thank you. What about you, Tom? Which investment model are you seeing people deploy right now that's kind of bringing the best numbers?
I can really speak to what I do personally. And I really focus right now on 2 strategies. One is the fix and flip model and private lending at the moment. And so
Okay.
I haven't really done a lot of buy and holds as of late, just given that it's very hard to cash flow. I'm sure there are those that exist. But what I have seen is that right now in this time, income is more important than appreciation for people. So with a proper fix and flip model, you can actually get those gains essentially in the short term. And some people will kind of wonder, well, how do you do that in a market that's kind of challenged? And remember, I mentioned that prices are holding. So you can establish kind of what is your ARV. And it's also about just selecting the right sort of property. And I'll give you an example, right? Durham region right now is overperforming relative to the GTA because of its affordability. So there's high demand there and relatively low supply. And the price points, again, are pretty good. It's about, let's say, 500, 600,000, and you can exit on a property there for about 8, maybe net about, within a few months, 50K, give or take. Again, these are high level numbers, but I'm trying to give you a real life example. And you do that 2, 3, 4 times, depending on your bandwidth. And all of a sudden you're creating an income for yourself. And in this market, what I'm finding also is that even though properties are struggling to sell, the ones that are selling are the pretty properties, so to speak. The properties that are not been properly staged, that don't show well, that are mediocre, they just stay, they sit. But the ones that are done up and renovated, people are willing to pay a premium for those properties because they don't have to go through the hassles of renovating. And also they allow the bank to finance that. And unless you have cash on the sidelines, which again, a lot of people don't, that becomes much more challenging. So that's one of the strategies that I'm still employing today and constantly doing for the last number of years. It's just about finding the right properties and screening them accordingly. And then on the private lending side of things, I usually lend out to investors that have a proper exit. Again, is there some challenges with that, some risk? Absolutely, and it's been in the news. But again, I think it's properly vetting those deals, and you get that income that I mentioned earlier that's been challenged in Ontario as a whole.
Yeah, absolutely. And I think it's what I'm hearing from both of you is the importance of experience, because there are ways these can be very challenging investment models when you don't know what you're doing or when you're working with people who don't know what they're doing. So it's about making sure that as an investor, you are educated, that you know and understand the intricacies and the ins and outs of where to buy a property, what type of property to look for, how to formulate your exit strategy. And then as well, making sure that the people on your team, if you're a newer investor and that is not your area of expertise, choosing people who can fill that gap or bridge that gap for you is absolutely critical, because you don't know what you don't know until somebody teaches you or educates you about that. James, what are you seeing in terms of risk? Where's the biggest risk that comes in for investors who are utilizing either a super hot market like Edmonton or a market that's kind of slow and steady like Vancouver is right now?
I'll start with Edmonton, and I think the biggest risk that people are taking on right now is over leveraging themselves. And the reason I say that is because in a hot market, it's very, very easy to get high leverage because lenders will often future forecast values when they lend, and rents go up quickly in a hot market. And so it's very, very easy to take advantage of programs like CMHC MLI Select to get, very aggressive loans to value, sub 80% loan to value. The problem with doing that is in a market like Edmonton, it's often quite cyclical, which means that it goes up, but it also goes down. And so if you are building a large portfolio with extremely high loan to value, if the market turns, if rents go down, if values go down, or if you're on variable product and the interest rates fluctuate, all of these things create long-term exposure in your portfolio that can create a lot of problems. And so I think a lot of investors like the idea on paper of putting less money down because it makes your return on investment look higher, mathematically speaking. But for anybody out there who's building a large portfolio with very high leverage, be extremely cautious. And I would say even start thinking about deleveraging some of your portfolio right now, because the Edmonton market's been hot for about 18 months. And I don't think it's going to stay hot for more than another 18, maybe max 24 months. And so it's important to batten down the hatches, preparing for when an inevitable market shift happens.
Yeah, I love that. I think MLI Select program is the best example of just because you can doesn't mean you should that I have ever
Yeah.
seen in real life. It's literally, you might have the opportunity to do this, but you need to really understand risk and understand what it means to be highly leveraged. Especially because Alberta is a very different market than Ontario and BC in terms of landlord-tenant things. And I saw the last downturn that there was in Alberta. There was quite a few times where I talked to landlords and they were telling me they had to cut rents. So what happens when you're highly leveraged? If you have to cut rents, then your cash flow or your income coming in decreases, and that reduces your ability to even be able to make the monthly payments on the debt levels that you're carrying, let alone the value of the properties, which is a separate matter altogether. So definitely there's a lot of risk there around that. I like that. I like being a little bit more conservative conservative in terms of leverage and loan to value per property and per portfolio. Tom, what would you say as a recovering accountant? I know you're all about the risk and the analysis and the future projections and all those things. What are you seeing as a source of risk and how people can mitigate that right now?
Yeah, along the same lines as James, it's really that that amount of debt that you take on, but I would say also managing your reserves as well. So I know for myself personally, and also for clients, I'm always looking out for what is the worst case scenario, and do we have enough money to ensure that if there was a change in the market or something didn't go as planned, do we have enough reserves to support that? Because otherwise, at that point, that investor has to make some hard decisions, perhaps selling in a market that they don't want to. Whereas if you can weather the storm and sell into a stronger market, that's more ideal. And unfortunately, I have seen people get in over their head with pre-construction, especially, and other projects where they just can't handle the debt load. It's kind of snuck up on them, and now they're making some hard decisions. Whereas someone, of course, who had reserves, perhaps maybe they can use that reserves essentially to offset the negative cash flow that they're experiencing.
Yeah. And when you talk about reserves, are you talking about just like a bank account stuffed with cash, or are you talking about something else like a line of credit that they keep available or whatever?
Cash is better, but lines of credit are also useful. Like I'd say, stock up on your lines of credit, just have it on the side, have a zero balance. But that's what we employ both.
Yeah, absolutely. Okay, let's talk a moment about some of the government policy and stuff that we've seen going on. And specifically, I'm glad we're actually recording now. For those of you who are watching, it is April the 3rd. And you've probably seen some of the things that have come out if you're following anybody in the real estate space on social media about the new commitment that Pierre Poilievre is making to if you sell a property in Canada from now until I think the end of 2026, they're waiving the capital gains and allowing you to roll the money back into a business or an investment in Canada. Do you think, let's start with you, James, do you think that that's going to make a difference for Canadian investors? Do you think that that is, first of all, something that's going to inspire them and motivate them, make them happy to get back into investing? But secondly, do you think that that's going to be something that would actually make a difference to voters?
Um, I mean, campaign promises are things I don't get too particularly excited about because we all know how politics works. So if it's a
Yeah.
change that actually comes through, if that party actually wins the election, that'd be fantastic. Of course, a tax break that is meant to encourage investors to reinvest into capital goods like real estate, obviously in this conversation, would be a great thing. But we are a heck of a lot of steps away from that campaign promise being a policy reality.
Oh, that is such a great reminder because there's somebody who said an awful lot and made awful lot of promises recently, and exactly almost none of them have come to fruition. So I think that's a great reminder not to vote based on one particular promise. What about you, Tom? Anything you'd add to that?
I personally love it. I got really excited about it. It's almost too
Oh,
good to be true. So
yeah.
we'll see if it comes together. But I do feel that there are investors in there that do have some when they're thinking about selling, they oftentimes kind of say, well, I got to pay a lot of tax on that and hold back as a result. So I definitely feel there is an opportunity for some investors to perhaps grow their portfolio and divest and get into some bigger opportunities there.
Yeah, I've actually seen a couple of people like our good friend Erwin Cito, who he said he would be happy to sell some of his properties and look at investing in businesses instead. Is that something that I know both of you have businesses, active businesses that you run, as well as being real estate agents or realtors? But is that something you would consider? Tom, would you take a foray into investing in a business?
We only got so many hours in a day, so it'd have to be a fairly passive one.
What about you, James? Have you looked at buying businesses at all?
Yeah, I mean, I already own a couple businesses. I think they
You do.
can make great investments. You know, if I can sell off a bunch of assets and not pay capital gains tax, you better believe I'm going to do it. So I'll be keeping an eye on how things develop in the Canadian political landscape. You can count on that.
Yeah, I love that. That's awesome. Um, let's talk a little bit about the landlord and tenant board and kind of what we see going on. I know um, Tom, you tend to manage or oversee management of your own properties. You have a number of them in Ontario. James, you, I think, have some property management help, but you also oversee a lot of your own properties as well. Have you seen anything at the landlord-tenant board level, any changes or anything that you think people should consider when they're thinking about investing in Alberta or BC?
Well, again, I'll speak to Alberta specifically. I wouldn't say any changes, but any changes would be potentially problematic for landlords because I don't think they're going to make any of the landlord tenant laws in Alberta any more landlord friendly. We already have the most landlord friendly laws in the country. So,
Sure do.
a couple of key highlights that I know out of province investors tend to like are that fixed terms leases automatically end at the end of a fixed term. There is no obligation to continue to rent to your tenant month to month if you have a fixed term lease. So if you have a 1 month lease or a 1 year lease, I should say, 1 year lease, at the end of that year, the lease is over. The tenant does not have a right to stay in the property. The second highlight that I think a lot of people really enjoy about Alberta is that on month to month leases, you can give a 90-day notice to vacate the property for any reason whatsoever. There doesn't need to be any sort of renovation or family moving in or any sort of unusual clauses or things that you have to prove. If it's a month to month lease, 90 days notice is sufficient to get the property vacant.
Wow. As an Ontario investor, boy, does that ever sound appealing. What do you think, Tom?
Exact opposite here, that's for sure, in
Yeah,
Ontario.
yeah.
It's tenant friendly for those of you listening and are familiar with. I haven't really seen a lot of changes per se, but I think if anything, if they could speed up the hearing process, that would alleviate a lot of the challenges. I mean, before COVID, we didn't really have a so quote unquote cash for keys sort of option. It was relatively fairly quick. And then all of a sudden this became the norm because the process took so long that landlords want to cut their losses. So if we could somehow speed up that process, it would at least help landlords quite a bit. But from what I understand, at least the last one I went through, it was at least 6 months, 6 months to get the hearing, give or take.
Yeah. And I mean, unfortunately, those are creating some issues here in Ontario for landlords. I spoke to an investor yesterday who is in absolute tears. She has a tenant who is just terrorizing her. And the tenant has said, I'm going to take you down. I'm going to destroy you. She is being slandered. She is like, it is unreal what this tenant has been able to do to her. And I think the biggest challenge in Ontario that I see right now is the fact that you don't even know if you get a hearing, you don't even know what direction it's going to go because there are some members at the board who are so tenant friendly. They are very obviously not following the law, not following the case law, not following the rules. So, I mean, I talked to a paralegal a couple of weeks ago and she said, you have a 50-50 chance of winning. And I said, but the law says this and my documentation says this. She goes, it doesn't matter. She said, when you get there, the members, and I was like, that is enough to make me want to leave Ontario or at least the long-term space immediately. And that's why I've been focusing pretty much exclusively on short-term rentals for the last little while because it's a bit wild, wild west. And that's the nice thing I think about the fix and flip strategy you've been doing, Tom, and then private lending is you don't have those issues with those investment models.
Exactly. I mean, that's why a lot of people have been kind of shying away from the long-term rentals. Although I would say, at least if you kind of get into the newer construction, at least there's no rent control with the newer construction. So theoretically, you could kind of speed things up by putting rent up to a certain point where people want to leave faster.
Yeah, exactly. Exactly. And then I don't think you said much about BC, James, just that it's a little bit more like Ontario. Is there anything we should keep an eye on there? Any proposed changes or anything?
Mm, I would say that the changes that have caused the most stir in BC in the last year have been changes to short-term rental rules. Basically, unless there are a few exemptions for resort towns, but basically, if you have to show that that property is your primary residence to be able to rent some or all of it on Airbnb, or I mean, Airbnb is the brand name, short-term rental. So it's
Hmm.
really, really inhibited short-term rentals in the province, which was something people were really enjoying because BC is a very tourist-friendly place. So the change of short-term rentals have been very challenging. In terms of long-term rentals, very similar to Ontario. Once your tenants are in, it's almost impossible to get them out. And with the rent control, that means that your rents are only allowed to go up by a certain prescribed percentage every year. That percentage is usually quite small. So it's a good reminder that being extremely cautious and mindful with tenant selection and long-term rentals is a very, very important part of the business.
Yeah, I love that. Then that's a fantastic tip. The only time you have control is before they're in your unit. So
Mhm.
do your due diligence. Know that there's unfortunately a ton of fraud going on right now. There's a lot of documents and stuff like that that is being produced that are not factually based. So utilizing a screening software like Front Desk or Single Key or something like that that kind of looks at their credit report and a whole bunch of other factors together that pulls the data from the original source as opposed to just asking a tenant to pull their own credit and provide it. Those are great tips. I love that. So looking at all these different factors, looking at government and tenant and the market and all those things, James, what would you recommend people focus on for 2025? Would you recommend that, if people decide they want to invest, that they contact you and start looking for a property in Edmonton, or do you have other recommendations as well?
Well, I love the nudge in my direction. Of course, I love talking to anybody in Canada that's interested in Western Canada. My personal approach is, again, your Warren Buffett quote is really dictates my personal investment strategy. Edmonton's a very, very hot market right now. I don't want to be in a bidding war when I'm purchasing an investment. I want to be offering below list price and having negotiating room. And so that really is the BC and the Ontario market right now. Those markets are struggling. And so, it's Warren Buffett's quote, be greedy when other people are scared. There's a lot of scared people in those two markets right now. I think that's a great place to get a deal. However, there are a lot of people that like to ride the rocket ship, as it were. And Edmonton is definitely a rocket ship right now. So for those people who like the idea of getting into a fast market that is increasing, Edmonton's a great spot. And in terms of affordability index, even with the increases in pricing, even with the increases in rent, Edmonton is still by far one of the most affordable places in Canada. So what that means for us as investors is that the ratio of rent to purchase price of the building more often than not produces positive cash flow. And so for people that are cash flow investors, there still really isn't any better market in Canada than Edmonton.
Yeah, I love that. And as a coach, I tend to be quite conservative and I'm always looking for cash flow. I'm always because appreciation to me is like the icing on the cake. You can't control that by and large. And this is kind of brings in the whole piece about timing the markets, right? You shouldn't be trying to get in at the absolute bottom and sell at the absolute top. You have to deploy an investment strategy or model that takes into account that the market may be up, it may be down, but if you're in it for the long run, then you're going to ride through everything so that you're consistently generating the type of returns that you're looking for. But I think focus on cash flow is absolutely critical for investors. We should not be looking at opportunities that are neutral or negative cash flow right now. There's too much uncertainty that comes with it. And I've seen investors having to go out and get second jobs because they invested in negative cash flowing deals and the interest rates went up and all of a sudden they can't carry everything on their own. So it kind of produces the opposite of what we're looking for. You can't pay the bills with appreciation. You have to focus on the cash flow. I like that, James. Thank you. What about you, Tom? What words of wisdom do you have for people who are sitting on some money or thinking that they might like to invest in 2025? They're going to make it their year. What would you suggest they do?
It's hard to kind of answer that without knowing what your goals are, right? Because
Yeah.
they, I guess Ontario historically has been a market that appreciates. That's why a lot of investors came here. It was stable, consistent growth. Whereas, as James mentioned, Alberta relatively much more cyclical. So in the long run, Ontario is, in my opinion, a great place to invest. I think, like, even right now, I'll give you an example. Like, I don't do a lot of pre-construction. However, right now, there's a lot of oversupply, a lot of deliveries happening, and that market is challenged. However, nothing is selling today. Guess what's going to happen in 3 or 4 years when they have not much to build? There will be a shortfall of that type of product out there. So you will see the benefits of that within, let's call it, even 4 or 5 years from now. So if you have that long-term mindset, then great. You will have appreciation there in that asset class. So
And there's some highly distressed people in the condo space right now. Like I've seen developers and builders suing people right now because they were unable to close on their pre-constructions from several years ago. So, and there are people who are looking for people to basically buy their contracts at a much lower, like they're forfeiting their deposits and everything else that they have into the deal.
absolutely. Yeah. I mean, that's what we're seeing a lot of. I get a lot of calls from people looking to try to exit out of the properties that they purchased 2, 3, 4 years ago. They can't get a mortgage, it doesn't appraise, or they won't basically qualify for that. So we see a lot of that sort of selling. Surprisingly, the stat I have here is that it's about 3% of those purchasers, surprisingly. But the people who are even closing are challenged because they close at, let's say, 600 or 700 grand condo, and it's only giving them $2,500 a month in rent.
Yeah.
That's obviously that's not going to be cash flow positive. So that's challenged. So going back to your question about where would someone see the opportunity? There's definitely an opportunity there, but you're going to be experiencing some short-term pains there. But you can see some long-term gains. Again, I go back to what I've been doing. I kind of keep it simple. I've learned over the ways that you don't really need to reinvent a lot. You kind of stick to what you know and keep on repeating it, because otherwise there's that shiny object syndrome, and then you get caught and start going different directions. But if you can master 1 or 2, maybe 3 strategies tops, you'll be better off. I mean, I can kind of just speak from my own experience that throughout this whole time, as you mentioned from the beginning, I've been fix and flip properties the whole time. And would I scale back a little bit at some point, more cautious? But I continually went through that and been successful along the way, not only for myself, but for clients.
Yeah, absolutely. I love that. James, it's really hard right now, I think, for people to avoid social media and the news and all the other crap going on and all the, the negative and the fear and everything else. So I think mindset is a really critical thing right now for investors. What do you recommend people do to work on their mindset? How do you recommend that people view the world of real estate investing right now?
Well, I think if we're talking about how to view the world of real estate, it's important to be mindful of the fact that there's a bad news story about every 6 months that causes people to be scared about the state of real estate. I mean, in the past 5 years, we have gone through COVID, interest rates going up, a war in the Ukraine, a war in the Middle East, Trump getting reelected, and now Trump threatening and then non-threatening and then threatening tariffs. So that, in addition to CMHC changing lending policy and lending policy around amortization changing. So if you're going to allow yourself to be worried about the real estate market, there will never not be a story that will scare you away from making a decision in real estate. I could cite every milestone going back in 6-month intervals back to the 80s. There's always a reason to be scared about the market. So that's the important mindset piece, is focus on the fundamentals of your marketplace and what drives real estate values, which are in-migration, job creation, vacancy rates, landlord-tenant laws. That's the news that you need to be paying attention to, but those are complex statistics. They require thoughtful analysis that doesn't make for a flashy headline. And the news is in the business of reporting bad news and scary news. It's not in the business of reporting economic data. So if you're going to be researching the real estate market, research looking at the factors that'll actually drive values and make your decisions from that.
Yeah, I love that. And I think it's important to really have the right perspective, right? And to not view this. Most investment strategies are not something that, the next 6 months are going to make or break you, except for Tom's strategy there. But it's about the long run. It's about buying a piece of property. It's about holding on to it for the long term. It's about waiting for, the market to naturally lift on its own. And you're going to see cycles. Things will go up, things will go down. But in the long run, you look back, is there a market in Canada that the properties are worth less now than they were 20 years ago? I can't think of a single one.
Absolutely. I mean, real estate is a longer term timeline for most strategies. And so it's about making sure that you've got a fundamentally sound property that will be able to support itself for the timeline that you have for your exit, because that appreciation will happen. It's tough to predict when, but on a long enough cycle, the appreciation will happen. I mean, there are people who invested in Edmonton in 2016, 17, waiting for that appreciation to happen. They had to wait 6 or 7 years until 2023, 2024, but it happened. In the meantime, the market was very flat. The rents were very stable. And, you know, if you didn't have a long-term approach, you may have exited before you got that payday from the hot market that we're in right now.
Yeah, absolutely. Absolutely. What about you, Tom? What words of wisdom do you have for someone who comes to you and says, I want to become a real estate investor, or I'm a new investor? What do I need to know?
Some great points already mentioned, but I would just say, you know, one of the I think key phrases that always stuck with me was it was time in the market versus timing the market. So holding that real estate and being consistent throughout turbulence has always paid off, right? I mean, you look at it, like you said, the properties. I remember in the 90s when it was challenged, and anyone that hung onto their properties from the 90s till now is laughing, right? Because they've seen that. But it's like, unfortunately, when it's challenged times, you wish they would they would finish quicker. Whereas we've kind of seen, I can speak from my own experience, the last 3 years have been a lot of turbulence. Sometimes you think you're coming out of it and you're back into it, and it keeps taking you on this ride. But throughout this whole time period, it's when you really reflect back, it has been positive. So sometimes short-term negative, but long-term positive.
Yeah. And I think that's a really critical point to mention, because I think what you look for, you will find. So if you come in with a fearful mindset and you come in looking for reasons not to invest, you will absolutely find them. Those news stories and the headlines and the, one-off experiences, you will absolutely find a reason not to invest and to never jump off the cliff, to never take that leap. But if you come in with the mindset that you are going to educate yourself, learn everything you can, take calculated and strategic risk, and make sure you're pairing your investment model or strategy to where the market is and what the market is, I think you can make some fantastic decisions that are going to be absolutely life-changing for your family. But keep in mind, what you focus on expands. So if you focus on fear and lack, then you will absolutely find that. And if you focus on creating the better future for your family and for yourself, creating time freedom and geographic freedom, then those opportunities are out there and you can absolutely find them too. I'd like to thank both of you so much for giving us your time and your expertise and your knowledge and insight today. We have covered a little bit about some of the markets and what's going on, investor strategies, regulations, and landlord realities. As someone listening, I want to make sure that I encourage you to stay informed, stay educated, be quick and nimble on your feet, be ready to adapt as things change in the marketplace. Be sure to follow along for more interviews and insights. And be sure to reach out to Tom and to James. I know they absolutely love to talk to investors, whether you are new or you have some level of experience and want to dive into the markets that they specialize in. They are absolutely wealths of information, and they are so happy to share with you. And make sure, my closing advice for our piece today is do your due diligence, invest wisely, and make sure you stay resilient. Surround yourself with the right people, with the right information, with the right mindset. And I hope you have a fantastic 2025. Thank you both, Tom and James, for joining us today, and look forward to seeing you guys again in the next couple of months and hearing what's going on in your world.